Yeah, hi everyone. I'm Lee. I am currently investing out of my own fund that I raised last year. Even though the title of this session is going from angel to fund manager, I think for me, I'm a little bit different because I went from a big fund to a smaller fund manager. So not quite the same experience as probably everyone else here. But to answer your question, I think I would just advise people to sort of do things that feel authentic to them. And for me, I've always really loved creating content, building products. And so as a fund manager, those are the things that I really lean into in order to distinguish myself and to generate deal flow and to sort of be recognized um, by founders. So that includes publishing regularly, having a podcast that I do on a weekly basis, and building this product called Side Hustle Stack recently, which I launched on Product Hunt in December, and is basically a website that compiles lots of different flexible earning opportunities and work platforms.
So I started chapter one, leaving Tinder as the VP of product. And obviously, there's a lot of fund managers, and it's hard to differentiate yourself. And I really enjoy building product. And so I wanted to align my personal interests with our offering as a fund. And so when the pandemic happened, it really democratized accelerators. You can start an accelerator with a good Zoom connection and some capital. So when YC went remote, I thought it was a good opportunity for me to launch something similar. We only take a couple companies, and it's very hands-on. We provide designers to each team, so it's really a smaller program. But it turns out anyone can start an accelerator in 2021. It's gone great. I mean, the first batch is probably the hardest because you're creating the curriculum and the content, and then it's kind of plug and play after that. But and then it turns out just this style appeals to a lot of people. The current YC batch has 300 companies, and so I compare it to going to like a small East Coast liberal arts school versus going to like a public university almost. Like if you want to be in a small classroom, go to a smaller accelerator, and that's kind of what we're offering. Yeah, I think for me, it's I used to follow Signal a lot more, like who's leading the round or who's participating. But everybody on those cap tables has a different reason for wanting to be a part of it. And so I used to look at AngelList syndicates and it'd be like, X big firm is investing, but then you actually look at the cap table, maybe they invest in a small amount, or maybe they just have a different strategy than you. So it's really defining your own strategy, and then also making the transition to becoming a tastemaker yourself. I think in the past year, I've aspired to do that, and in some cases, I think I've been able to. So it's having the confidence to become to kind of generate heat for your own deals, and figuring out how you can build that brand for yourself. So when Lee or Jeff or Zach does a deal, people really care and want to pay attention to that.
So I would definitely say caveat all of this with the fact that I didn't learn how to invest as an angel. I learned as part of being on the investment team at A16Z for 4 years. But I think, there's just so much that I learned there. I would say I think as angels, people are typically investing in really, really early stage deals just as a function of the check sizes that they're able to write, or maybe because of access. But I think just as we talk about founder market fit, I think there's also a concept of investor market fit and also investor stage fit. Like I think there's lots of different stages of investments that you can do, and the skill set and interest that you have could map very differently to different stages. And so previously I had been focused on Series A, Series B deals, and that's just a very different process in terms of diligence and how you work with that company than what I'm doing now, which is upstream of that at seed. So I would just encourage everyone to not only think about their investment thesis and sector focus, but also think about the stage that they enjoy doing the most and where their aptitude is. Like if you're really good at analysis and metrics, then that suggests, that maps better to slightly later stage deals than being, very good at sort of reading people and get like understanding their motivations and like being more of a picker of teams and people at the early stages.
I think it comes down to investing in companies that you're proud to share the story of, and then people love the behind the scenes story about how deals went down. And so like the classic one for me was I did the Rome research deal in March and wrote like this Medium post where I just talked about my relationship that I built with Connor and how we had like spent 10 plus hours on Zoom and he was like smoking cigarettes while he was pitching me. And it was like very kind of like, it's almost like behind the music, but behind the music for investing. And so it's trying to show kind of the personal aspect of the business. And I think people really just want to see that. I always used to love like watching director's cuts on DVDs where it's like, the play by play of like each scene. And so I just try and be really like all access with how deals went down, and people love that. I think a lot of us we haven't talked about it publicly, but a lot of funds have invested in our funds without, and so like pushing things upstream is actually remarkably easy, especially if there's any heat around a deal. I think the more interesting part of what's going on is the relationships that we're building within kind of the cohorts of emerging managers. And so, like Lee is an example. Lee and I started fundraising at pretty similar times, and so we're constantly just talking and comparing notes. And when we do phone calls, it's not like transactional deal sharing. It's a lot more personal than that, I think. And so, and through that, you just get to know people on a much deeper level. Like I don't really do well with like the transactional like run down the list deal calls. It just feels so like CAA to me, or like it's like working in like the agency world, which I did a long time ago. And so yeah, I think knowing who your peers are and your cohort is, and then also kind of like doing the same for the emerging class. There's already so many new funds, and I'm answering similar questions that I went through for them. So that's I think those are the more interesting. And then also like I don't try and network with like the GP at Sequoia because I'm sure they're great people and they're smart, but those people aren't going to be available to me, and they certainly won't really share deals with me. So I find making time for principals and associates is actually a lot more valuable.
I think when it comes to later stage funds, a lot of them will be really receptive to building relationships with angels and earlier stage funds because they want deal flow and they want access to all of the companies that you're investing in. So I think that comes pretty naturally. In terms of building relationships with other earlier stage investors, I think most of us, all of us in this panel, are pretty collaborative investors. Like none of us are trying to take the entire round or even trying to take like the vast majority of a round. And so if you're an angel investor that can easily slot into a larger round that's taking place, then I think forming relationships with other investors will be relatively easy. And then I think when it comes to building relationships with other more institutional seed investors, I found it's always helpful to let founders kind of help you do that work. Like if you have a reputation as being really helpful to a company that you're a co-investor with another fund in, then they would naturally want to reach out and chat and establish an even deeper relationship with you. So I think the first priority that I always come back to is like, how can I serve my founders better? And if I can serve my founders better, that helps me build relationships with investors, whether they're later stage investors or early stage investors. And when it comes to the conflict of interest question with regards to LPs and the fact that we're taking capital from various downstream VC firms, that's the same thing I tell them. Like my primary customer is the founder, and so I'm not going to give anyone preferential access to these deals because my first customer that I'm serving is the founder, and I want to do right by them. And so no one gets first looks at anything. Everyone gets sent the LP update at the same time, gets access to the deals at the same time, and it's really I'll help the founder make the best decision for them rather than prioritizing a certain LP.
I think for me, it's about, I've seen articulating a single value proposition and really becoming that person and delivering on that at inflection points for the company where, specifically if you're a pre-seed or seed investor and the company's like raises a big series A or series B, the reality is someone else kind of like adopts your baby a little bit. And you're still there for the team, but you're not going to be as day to day with them as maybe before that. So for me, it's about just defining a single value proposition and going above and beyond to be the best person on the cap table for that thing. For me, it's helping with product and people know to call me when that's when there's questions about that.
I would encourage people to not try and boil the ocean and compete head on with like a multi-stage firm that has a platform team. Like I'm coming from a firm that had 200 employees and everything from marketing to like corp dev, market development, everything. And that's just going to be impossible to replicate as a small fund manager or as an angel with not a 200-person team. And so we have to recognize that the founders are doing their job of assembling their cap table such that they have different areas of expertise represented on their cap table. So rather than going to one investor for everything, they're constructing their round to be able to tap into different areas of expertise and value adds from all of their different angels, but they're not expecting everything from a single person. And so for us as angels, we just have to figure out what is that superpower that we are leaning into, and that's going to be different for everyone. I think everyone needs to figure out like what they enjoy doing / what they're good at and really lean into that point of differentiation.